volatility, people immediately say is negative, like a volatile substance can blow up. But volatility is like cholesterol. There's good cholesterol and there's bad cholesterol. So volatility can also be like a heartbeat. It shows vitality, or it can be like a shudder telling you that something's wrong. So Bitcoin has good volatility, but overall, if you look at how volatile Bitcoin was 3 years ago, it's half as volatile. Its volatility is coming in, which means its uncertainty is dropping.
It's Wednesday, April 24th, 2024. Hello and welcome back to Markets Daily, where we bring you insights from the smartest and most experienced traders, investors, analysts, and so much more. It's been 5 days since the halving, and Bitcoin is holding steady at around $66,000. There's been barely any movement, which we'll talk about why that is with our guests in a minute. Ethereum and other major crypto assets have been following a similar trend as they usually do. Surprisingly, Matic is leading the market today, up about 4% at 76 cents. But overall, it seems that the market is still digesting the halving on Friday night while also navigating the macroeconomic landscape. So let's chat with our guests about this and more. On the show today, we have Mark Connors, Head of Research at 3iQ. Welcome, Mark.
Helene, thanks for having me on. Always a pleasure being here.
Mark, this week has been surprisingly calm in the crypto markets, with Bitcoin and Ether both trading in tight ranges. Why are traders hesitant to make moves right now? Or is this just a normal post-halving reaction?
That's a lot. That's a packed question there, Helene. Is it a normal one? So, like most analysts, we couldn't help ourselves on using just the 3 data points from the prior 3 happenings to project going forward. And we know that 3 data points or 3 events don't make a pattern, and it's not exactly a consensus or robust sample. But it is following the same pattern. In fact, at the beginning of the year, we looked at the prior 3 halvings. And when Bitcoin was at 41,000, we said, all right, we like the prospects of an ETF. This is in January, before the 11th, when we did our outlook. We think the macroeconomic environment, which you just mentioned, supports fiscal spending, which means that Bitcoin thrives as a store of value. And as we saw with the Frankenstein bill passed just a night or two ago of $95 billion to fund Taiwan, to fund the Ukraine war, to provide humanitarian aid, I believe, to the Middle East, and to help the Taiwan semi. They basically, there's almost nothing they didn't throw in this bill. All that spending is constructive. So where am I going with this? Bitcoin enjoyed a movement from January through the middle of March based on the macroeconomic environment, which is constructive, and based on past halvings. We put a price target of between $55,000 to $85,000 by the halving, and here we are at 66. So it's to plan. So thanks for letting me land the plane there after a 2-minute soliloquy there, Helene. So yes, macroeconomic environment and past halvings were both instructive. And what are people waiting for next? More adoption, more buyers.
So, Mark, you say that the halving will have the same result as the last cycles. How is that possible if we have such a different macro and institutional environment than 4 years ago?
For different reasons. So dead on. What the halving does is, as we know, programmatically cuts supply in half. It's not as big a deal this time, Helene, dead on, because we believe it's more of a demand-driven motion. So that's how it'll change. But what the halving did do is it brings attention. It validates the fact that this is a disinflationary product. So it's more of almost a marketing advertisement for Bitcoin and a period of galvanization. But as far as dynamics, it is demand. The macroeconomic environment, I would say, is the same. In 2008, we had the crisis, we had printing. In 2019, we had a repo break, we had printing by the market. In 2020, we know what happened. We had $6 trillion of printing. In 2023, when 4 banks failed, we had $400 billion of printing. Last night, we printed. So the macroeconomic, it's just been a stairway, to debasement. And all Bitcoin does is, as we know, is sit there and slowly allow more people to realize, like the Kansas RIA, who put 20 million into their fund. It's one of their largest holdings. Middle of the country, no one's heard of them, but people are buying. They didn't own 20 million of the FBTC before, now they do. So we see more of that going on.
I'm going to come back to you about Kansas. But speaking of printing, tell me about the impact that the weakness or strength of the dollar has on the price of Bitcoin, and how closely are you watching this?
If there's one word, Helene, you and I will speak over the next year, and I think if we do Google searches, the term fiscal dominance will be like Brexit was in 2016. People are going to be just hitting that thing early and often. What does it mean? It means that to solve problems, we don't try to have legislation or try to promote jobs. We just print money. So we did it again last night. We're going to be doing it again. So I think that the political expedience has found an only avenue of egress, and that is to pull the lever of printing more money. And as it relates to Bitcoin, what it does, housing prices, all finite assets, watches, wine, unique finite assets gain what they call monetary premium, stores of value. And that's happening. Even with mortgage rates high, Helene, you're seeing housing prices just go higher.
I want to talk a little bit more about specifically your outlook on the price of Bitcoin. Do you expect more selling pressure to come in the coming weeks and months as a result of the halving, or are we going to stay at this mid $60,000 level for a while, in your opinion? What's your outlook? And maybe you can also talk about your price outlook for the end of year for Bitcoin, if you have one.
Sure, I'll start with that. Our year-end price is, we have 3 price points. The base case of 110, the midpoint of, I believe it's 160, and the high case of 180.
And is that dependent on rate cuts? Is that priced into that?
No.
No.
It is basically based on printing. So it's not the price of money that matters, Helene. It's the supply. And there's more coming, unfortunately.
Mm-hmm.
And that just means that hard assets will accrue in value as a store because people are going to put their money somewhere. And I want to step back and talk about our 3 price targets. And it relates to your question about where are we in the short term or medium or long term. We have a big spread between among our 3 points. And if you notice, the midpoint of 160 is not between 110 and 180. And that's because Bitcoin's price distribution punches really hard to the upside. It's positively skewed. So to our listeners who aren't in statistics or finance, which means you're probably more fun than I am, what that means is that if you look at a sample of people in a mall and you put all their heights together, it'd be normally distributed. Be average, say if it was men, it'd be average of 5'10", women average 5'7", 5'6", and then everything's around it. It's a bell curve. So we all know what the bell curve is. But there's some distributions of observations or returns that aren't. Bitcoin, its distribution has a big fat tail to the upside over any rolling 2 or 3 year period. And managers like that. Managers in Kansas, BlackRock, Fidelity, they're like, this is really unique. I need to own this. So that's why our mid case is closer to our high case, Helene, because Bitcoin's performance acts that way.
How about the volatility, though, that we're still seeing in Bitcoin and Ether and the broader crypto market? Is that something that you see easing over time, or are we always going to have to deal with that?
So I'm going to do something here. Volatility, people immediately say is negative, like it's like a volatile substance can blow up. But volatility is like cholesterol. Now, you don't have to worry about that right now, Helene. I'm going to make a judgment there, and but people my age do. And there's good cholesterol and there's bad cholesterol.
Mm-hmm.
So volatility can also be like a heartbeat. It shows vitality, or it can be like a fear, like a sort of a shudder telling you that something's wrong. Bitcoin has upside volatility. So Bitcoin has good volatility, but overall, if you look at how volatile Bitcoin was 3 years ago, it's half as volatile. Its volatility is coming in, which means its uncertainty is dropping. That's why you're seeing adoption. But we talked before the show kicked off about treasury volatility. It's going up. There's more uncertainty about who's going to own our treasuries, how many we have to issue. With that, the market's stepping away a bit. And when buyers step away, volatility increases. So there's a huge difference in the behavior, improving volatility with Bitcoin and deteriorating volatility or more volatility with equities and debt. So that, I think, is one of the most underappreciated stories in finance by many, except, again, folks at BlackRock, Fidelity, and now we find out Kansas, Minnesota, Iowa as well.
Okay, let's get to Kansas. Let's get to BlackRock. I was reading one of your recent interviews, and you said that one red flag that you look for in projects or businesses is centralization. Now, a lot of your peers in the industry have criticized exactly that about the spot Bitcoin ETFs because they almost all rely on one custodian, which is Coinbase. So does that mean you'd stay away from investing in those ETFs, or is this a different scenario of centralization?
It's not a different scenario of centralization. So Bitcoin is unique, and this is, if volatility is a tough concept, this one shouldn't be as difficult, but it's not. It's foreign. When you own an equity, it's not a bearer asset. It's a certificate. If your broker, Fidelity or BlackRock, or someone loses it, they get another one. Like there's a trace. But Bitcoin's a bearer asset. It can be stolen. And the question is, can it be hacked? Can it be? So the fortification and the security of each custodian is of paramount importance. So it is something to be focused on. As far as a concern, I would say that it's a priority to understand how your custodian, Coinbase, Fidelity, or others, manage the assets. So some people think just because I own it, it's all fine. You should be curious about it. Now, I believe the number is about 4%, Helene, of Bitcoin supply is within the U.S. ETFs. What is it, $58 billion. So that's a number. Is Coinbase a honeypot? That's something that some people are talking about, but Coinbase also does have a pretty robust system. But it is something to look at. And it's another reason why some folks are looking at multi-sig and other types of options.
Right. So we've been getting some data recently on the investors behind the spot Bitcoin ETFs. What's your reaction to that so far? You mentioned Kansas. Is there anything else that's stuck out to you?
Yeah, it's anecdotal. So first 13F filings is a requirement. If you look at Amazon, you look at the holders, you see the Jeff Bezos is number one. His mom and dad are number two still, God bless them. And then they go down the list. But the top 10 holders are probably 25% of it. It's a concentration, and it represents a large amount of the holders. If you look at the spot Bitcoin ETFs, the 10 or 20 names they have don't add up to 1% of the holdings. That's because they're RIAs. They have 10 or 20 million of the 10 billion or 5 billion, depending on who the ETF issuer. It's still retail. The institutions did not show up, but the institutions are RIAs, registered investment advisors, who have individual retails. They're somewhere between a BlackRock and just what we call, or Eric Balkunas of Bloomberg calls, the do-it-yourselfer retail person. The registered investment advisors that did show up were from the Midwest. I think the guy from Kansas has his own ranch. They have they have almost like a family community integrity ethos. So there's almost a pattern we're seeing in the RAs that did show up. It wasn't really New York or LA. It was the middle of the country in the US. Think like more of a conservative background. So that's something that we're looking for as far as if that's a pattern. And in crypto, we know meme coins are a big deal. We wonder if Bitcoin is its own meme as far as does it attract a certain ethos of libertarianism, people say, sovereignty and all that. So
yeah,
really to be determined, Helene.
Yeah, really interesting, and we'll get more data on that in May. So we'll probably have you back on and talk about it a little bit more. But Mark, thanks so much for coming on and sharing your insights with us.
A pleasure. Thank you, Helene.
That was Mark Connors, head of research at 3IQ. And that's it for Markets Daily today. We'll be back tomorrow with a new episode. As always, leave a comment if you have any questions for our experts, and we'll make sure to get that answered for you. I'm Helene Braun. Thanks for tuning in.